You think the economy is getting better, but the truth is you are actually getting poorer every single day because you are playing a game where the rules were written by people who want your lunch money. Look at the data right now in May 2026 and tell me if this feels normal to you. The cost of living is skyrocketing, interest rates are eating your soul, and while you are debating which fast food meal is still affordable, the greatest investors in history are quietly exiting the building. Before we dive into the bloodbath, I want you to do one thing for me right now. Stop what you are doing and comment your age and the exact amount you are currently investing every single month down in the comments below. Are you doing $50 a month or $5,000 a month? Be honest, because we are building a community of winners here, and transparency is the first step to escaping the rat race. If you do not have a plan, you are the plan for someone else to get rich. Guys, Friday, we got two major signals about the economy. We got another strong jobs report, and the stock market hit another all-time high. Now, normally people think those two things are totally separate, but they are actually very closely related. Okay, and I think the stock market, if you are an investor, it is really telling us that something important is happening right now that we should be paying attention to. The economy may be entering into, and this is just my opinion, a completely new phase. Now, I have been calling this new phase a job reset, not a collapse, definitely not a panic at this point, and not anything that is conspiracy. Okay, I am talking about a shift in how this whole economy is literally functioning right now in terms of jobs right before our eyes, because right now, no matter how you feel about the job numbers that we've seen that came out Friday, we are seeing a few things that are important. We are seeing a very low unemployment rate along with rising productivity. That is our GDP, right? We also see AI expansion happening big time across tons of different industries. And we also see in the market, the stock market, we see a lot of optimism, and we see investors that are betting on the fact that this next version of our economy may be stronger and more resilient than people actually expected. So let me talk about the actual numbers so we are clear. Okay, Friday's jobs report came in stronger than most of the talking heads really expected. The economy added about 115,000 new non-farm jobs in April, and many economists were expecting closer to around 60,000 new non-farm jobs. Remember, we can only go by the numbers, folks, that they gave us. Whether you agree with the numbers or you think the numbers are bogus and made up or that they are tricking us, that is a whole another issue. I am only looking at the numbers. Okay, we can speculate all day long, so I am aware that these numbers are a tad bit, shady, but at the same time, it is all we have to go on to make these analysis. So the economy added 115,000 new non-farm jobs in April. Economists, again, we were looking at about 62,000. So this came in almost double what the expectations were. Unemployment itself stayed at about 4.3%. Wages were up 3.6% from a year ago. That is over what inflation happened over the last year. And the SP 500, again, it closed at another record high. Well, over 7,300, the deal is employment stayed solid. The labor market continues to show that it is strong, at least on the surface, right? And unemployment still stable. Now, what is interesting is this. People have spent the last couple of years expecting what the economy to finally crack. The Great Recession is coming, right? And the economy is going to fold and everything is going to go crazy. I was making videos about a potential recession 3 years ago, and guess what? It ain't happened. We have been expecting higher interest rates, inflation pressure, recession layoffs, and all these industries and people you see on the internet, these YouTube streets. People been feeding you all this negativity, and guess what? The labor market is still standing, and it appears to be standing pretty strong. Another thing that is important to note is that March payroll numbers were actually revised higher. Now, February a couple of months ago, it was revised down a little bit, but overall, guys, the labor market is still cooking. It is just not folding, like all the experts were telling us that it would. Now, does this mean this is a perfect economy? Of course not, right? We know that housing affordability is still crazy through the roof, pun intended. A lot of families still feel the pressure from all of the past inflation that has been piled on top of where we are right now. And this high cost of housing and groceries and ridiculous high gas prices. Look, debt levels are still high and growing for many Americans, but the actual labor market itself, straight up jobs still strong. And here's the kicker: Wall Street. The stock market has noticed the SP 500. Again, another full all-time high on Friday. After the jobs report came out, see, investors basically looked at this jobs report and said, you know what? The economy still has momentum. Now that matters, because the stock market is just businesses. Guys, make sure you understand that the stock market is some far-off foreign entity object. No, it is just businesses. And businesses, they are always forward-looking. That is how they stay in business. The stock market is not trading, or stocks are not priced based on what happens or what happened a month ago or 6 months ago. Businesses or stocks are always trying to predict where the economy is going next. And that is reflected in their price per S-hair and in how they trade. So right now, the stock market businesses seem really confident that they are going to keep on making a whole bunch of money, and that consumers like me and you are going to continue to spend money there with them, and the economy is going to keep growing. That is what businesses are saying every time you see the stock market hitting these all-time highs. And then, as I said earlier, the average hourly earnings are still going up around 3.6% year over year. That tells us right there that businesses are paying more to employ you, right? Which tells you that the wage pressure is still in the system. Now, at the same time, labor force participation actually dipped slightly. Okay, that went down. In other words, fewer people are actively participating in the labor market right now. And here is the deal. When you combine fewer people participating in the labor market with relatively strong hiring and low unemployment, here's what all that suggests. Parts of the economy may still be dealing with tighter labor conditions underneath the surface. Now, a labor shortage. Let me just explain that real quick, because that means something. A labor shortage basically means companies are still struggling to find enough workers in certain sectors, especially skilled labor right here in America. And that may be one of the reasons why we see unemployment remaining relatively low despite these higher interest rates we've seen all around us. This don't look like a stock market that is pricing in an economic collapse flat out, right? This looks like a stock market right now that believes something is stronger and something positive may be developing underneath the surface for the long term. Now, the stock market, it loves a wonderful jobs market, and a lot of people get confused by this. They say, wait a minute, why would the stock market go up after a jobs report? Well, listen, strong unemployment means more people are working. More people are making money and earning an income. More people are spending money, and that helps who businesses. And where are businesses in the stock market? Because the more people working and making money, the more people are going to do what? They're going to spend their money. And when businesses continue to make profits and they continue to pay people more and people continue to be employed, stock prices tend to respond positively. Because again, stock prices are just businesses, the market, the stock market. It loves stability, it loves predictability, the stock market loves economic momentum, and a strong jobs market is economic momentum to the stock market. Remember, the stock market is not the economy, folks. The stock market is really, watch this. The stock market is simply a bet on the future economy. And that is important, right? Because if the future economy looks strong to businesses, they are going to hire more people, pay people better, and ultimately their top line revenue is going up. And that means the stock market is going up and hitting all-time highs. See, investors who invest in these businesses in the stock market, they are constantly trying to figure out what businesses may look like in 6 months from now, in a year from now, and in several years from now, right? Because that drives investors to invest more money. Listen, I think investors may also be betting on something else right now. I think the stock market may be realizing that this economy that we are in the middle of, not seeing the big picture. We are smack dab in the middle of it. The economy is changing structurally. Some of the old models that they use to make determinations just aren't happening at this point. Right now, I am not talking about temporarily, right? I am talking about structurally changing the way people work, the way companies operate, the numbers that these companies are looking at, the way that productivity is happening in companies. Think about AI, okay? And the way money flows through the economy, it is a little bit different. All this stuff may be evolving at the same time right under our nose, and we don't even see it because we are in the middle of it. And look at where jobs are right now. Jobs are growing. Okay, believe it or not, we see the big headlines that say layoffs, layoffs, layoffs. But guess what? The rest of the economy is not reflecting the headlines that they are feeding us. Healthcare added tens of thousands of jobs, transportation and warehousing. Those sectors stayed strong in terms of employment. Retail, it showed some growth. Social assistance jobs, they increased as well. Now listen, we did have some traditional information sectors, some financial sectors, and parts of manufacturing that stayed about the same. But look, a lot of things are growing, and listen. Whether you believe the numbers or you don't believe the numbers, it is all we have to go on. But all of this growth that we are seeing on the surface is all a part of what I call the jobs reset story. This jobs market doesn't fully match up to the old economic playbook that we are accustomed to looking at. It just doesn't AI expanding stronger productivity. Some resilience and employment, rising stock markets, stable unemployment. Unemployment has been around 3.8 to 4.3% for the last several years, right? And when you put all of this happening at the same time, things look different. The old models, they not modeling what we are seeing, and I think Wall Street, the stock market, has seen that before. Most of us see it, and that is why we see these incredible increases and incredible all-time highs in the stock market, despite what we may think about how horrible things are right now. All of this could be why we are seeing that the stock market keeps showing strength, even while you see people online predicting doomsday every single week out here in these YouTube streets. And on your social media feeds, look, I put a video out last week saying things look good on paper, and half the comments said, "What you talking about?" Things don't look good on paper, but hold up, the stock market is hitting all-time record highs. That is not an illusion. That is a fact that is happening. No matter what you may think about the numbers on paper. So businesses see the optimism and businesses see the growth that is happening, and they are looking forward. Even though we, the people, may be feeling a little pessimistic, right? We got to be very, very careful that we don't take the skepticism of the numbers and turn that skepticism into pessimism that is not lining up with reality, right? We got to be careful about the mind tricks and mind games. Yeah, these numbers may be fudged, but guess what? The numbers may be right. We just don't know. And I am not carrying the bucket for any blue, red, Democrat rep. I don't care about that. I am looking at the numbers that we are getting. We got to use some discernment. So guys, let me spend a tiny moment on this video about what I mean by the jobs reset. What I think is that we are watching the economy transition into really a different era of work. It is just my opinion. Think about AI companies across the board, from food service jobs, retail jobs, the federal government, right, to your network engineers, your healthcare workers. All of them are trying to figure out how to do more with fewer people. That is a completely different environment than what many people grew up with. Okay, it don't look like the old economy anymore, and I think investors know it, and I think the stock market knows it. I think this may be one of the first periods in modern economic history where technology, automation, labor demand, productivity, the stock market's optimism, all these things are evolving rapidly at the same time right in front of our face. That is the jobs reset. And I think this stock market is realizing that this economy is not about to slow down anytime soon in the traditional ways that we've seen economies slow down before or that people expect. It may actually be restructuring itself in real time right now. See, for years, guys, people have thought more technology is going to destroy the economy ultimately because it will put people out of work. But what if, let me just put this what if out there, what if technology actually increases productivity to the point and it increases profits to the point that it actually puts more people back to work? What if AI actually improves efficiency enough that now more people can work because of AI, and AI creates an entirely new phase of economic growth? Like, have we thought about that? That may be the part that investors are betting on right now, and it is pushing the stock market higher and higher. And honestly, guys, I think the stock market, these businesses out there and investors may actually be seeing this transition as bullish for long-term productivity and long-term profits. That is what I think. Now, if I am wrong, let me know in the comments your thoughts on this. Okay, but all of this may explain these constant all-time highs that we are seeing in the stock market despite our skepticism and lower consumer sentiment. Think about how fast things are changing right now. Listen, the AI tools that were popular in 2025, they are not popular in 2026. And the AI tools that we are using today, they are going to change in 2027. And what we will be using in 2028 is going to be totally different than what we are using right now. In terms of AI, I mean, at the job, logistics, manufacturing, software, robotics, cloud infrastructure, digital payments everywhere, right? Automation businesses are changing incredibly fast, and the stock market is trying to price all of this in real time. Now, let me be super clear about something. All of this optimism does not mean that every person's going to benefit equally. That ain't going to happen. Okay, let us be real. Every economic shift in the history of economic shifts creates winners and it creates losers. And this is why so many people that you see online or you hear talk business, they are telling you to get on the AI bandwagon to understand robotics, because you don't want to be a loser when it is all said and done. Right? I am just being honest with you. There is going to be opportunities and there is going to be losses. But I think the big story here is this, guys. This economy itself may be evolving faster than most of us realize. This is not the same economy that people were preparing for just 3 or 4 or 5 years ago, 10 years ago. No, not even before the pandemic. It is a different economy. The game has changed and we got to be flexible and change our game too, right? This also creates, let me just say this cuz this is important, this also creates an interesting situation for the Federal Reserve, because if the job growth stays stable like it has been the last several years and productivity keeps rising, we see a stronger GDP and we see inflation, although we know it has gone up to about 3.3% recently. But if we see inflation cooling back down gradually and the stock market continuing to go up, then the Fed may eventually have to adjust to an economy that is behaving differently than expected. I know we got a new Fed chair coming in, Kevin Warsh. It is going to be interesting to see how he plays this. Right, there is no playbook for some of the stuff that we are seeing right now in this economy. And this is why Jerome Powell, the former Fed chair, may have been fighting a 2026 issue with a 2015 solution, perhaps, right? Because look, the Fed had been talking about getting the inflation rate down to 2% for what? The last 3 or 4 years, and inflation never came down to 2%. Right? We go back 3 years ago. I am making videos about, well, the Fed really wants to get down to their 2% target. Dude, 2% target. We haven't got to the 2% target yet, and Jerome Powell's term is over, right? That is important. It signals that maybe the old parameters that they were using ain't going to work in this new economic climate that we are in. Because think about it, we were talking recession back in 2023 and 2024. Many people assumed that higher rates and all these things would break the economy. It didn't break the economy. What if this economy that we are in right now today is more resilient than most people expected? And based on what we are seeing, this appears to be the case. Right. What if the changes in AI and technology and the changes in productivity? What if all of that is helping offset some of the pressures of having slightly higher inflation, where they thought 2% inflation was the goal, but really we should have been looking at 3% inflation? Who knows? What if businesses are becoming more efficient faster than expected? That could completely change how investors think about the next few years. And the stock market. See, one reason the market reacted so positively on Friday to a good jobs report is because investors keep believing that this economy may actually be able to handle higher interest rates longer, higher inflation longer, better than people expected, better than the experts were predicting. That is a major shift in thinking, because if the labor market stays the way it is right now, guys, and consumers keep on spending and the businesses remain profitable and the stock market keeps going up and productivity continues to improve. All of this happening despite a 3.3% inflation rate, despite some layoffs in some sectors, despite war over in the Middle East, right? Despite high tariffs. Remember when people were saying, oh, these high tariffs are going to destroy us. It ain't destroyed us. I know there has been pullback on the tariffs, right? But we are still here. The economy still looks strong now. Look, obviously volatility can still happen. Let us be real, right? We know that. We are not all hyped up and happy and, oh, this is a wonderful economy because of the numbers they gave us. No, we are not dumb, right? We are not thinking that at all. We know with these global issues going on, anything is possible, right? The president may come out and say something tomorrow to cause a crash in the stock market, right? It is possible. Markets can still pull back. We know this. Recessions are still possible. We know this. Nothing moves in a straight linear fashion in this economy. And to be fair, this wasn't even a perfect jobs report, right? Some economists pointed out the fact that part-time work increased. Labor market participation dropped slightly. So there are some issues and problems under the surface. We know that this is not a perfect economy. I am not saying that, but overall, the labor market still came in a whole lot stronger than a lot of people expected, and I think that is why the market keeps going up and up and up. Investors and businesses are realizing that this economy is not breaking in the traditional ways that many people expected. This economy may actually be stronger. This economy may actually be restructuring itself in real time, making corrections itself in real time, right before our eyes. And really, I think that is the real story here. Bigger than just one jobs report, it is bigger than just one strong market rally. Right, I think we may be watching the early stages of a new economic phase, a phase that is shaped by AI productivity, new technology, labor shifts, manufacturing changes, slightly higher elevated inflation, and evolving business models. And based on what is happening in the stock market, it seems like businesses think that that phase is going to be stronger than all of us predicted. That is why I wanted to talk about this today, because I think the jobs reset may be already happening. And most of us, we don't even realize what we are watching in real time. The difference between the rich and the poor in 2026 is simple. The rich own assets and the poor own liabilities. If you are sitting on cash while the stock market is at 7,300, you are losing purchasing power every single hour. The dollar is being debased, and your only protection is owning a piece of the world's best companies. I don't care if you start with $5 a day. Start somewhere, open that Roth IRA, buy VU, buy SHD, buy quality, and hold it until the day you die. Wealth is not about your salary, it is about your savings rate. I know guys making $250,000 a year who are broke because they are trying to look rich for people they don't even like. And I know guys making $60,000 who are millionaires because they drive a 2006 Toyota Corolla and live in a minimal space while their index funds grow. The path to $1,000,000 is boring. It is a marathon of discipline, $120 a day for 10 years at these growth rates, and you are a millionaire. That is $3,600 a month. Sounds like a lot, but what is the alternative? Working until you are 80. Stop being a consumer, start being a producer. Every dollar you invest is a soldier working for your freedom. Don't send your soldiers to die on depreciating assets like shoes or electronics. Send them to work in the SP 500. The market loves economic momentum, and we are in the middle of a massive structural shift. Don't wait for the perfect time, because the perfect time was 10 years ago, and the second best time is today. Look, if you like this video, this information, and you appreciate these Sunday economic updates, smash that like button for me. Let me know your thoughts below, right? If you got value, you can just say, I got value in the comments below. And listen, if you want more help getting your money organized in a changing economy, do me a favor and check out our community. We dig deeper into the stock market. Okay, listen, we also have the 4-step financial reset starting in a month. Be looking out for more information on that. I appreciate you guys more than you know. Thank you for spending some time with me on this video. Remember, the best person who is going to take care of that old you is the young you.